Switching our attention now over to the grain markets. This week we were joined by Heather Ramsey from the ARC Group. As the end of the year nears, we spend some time discussing 2023. But first, we review the latest when it comes to the markets here in December. Let's talk about this trade. It's been much of the same, much of December, much of this past several months. Size it up for us. What do you see?
You know, our main headline points are continuing to look at what's going on in China from both a COVID and an export or purchasing scenario. Obviously, the rail has been off and on, really important over the last several months. Ukraine and Russia still ongoing. Depends on the week on whether it's front and center or whether it's kind of slid to the background. And then weather. We have shifted that discussion a little bit out of the northern hemisphere into the southern hemisphere right now. But still, weather is always going to be key when we're talking about a product that we're growing outside. So really important. That one has come back into the southern hemisphere with some interesting headlines related to one of the countries. I kind of look at it being sort of that sister production area, not necessarily the primary area having issues. So weather is there, but the premium and risk discussion probably not as high and as important as what we saw this summer with the U.S. So.
Well, the WASD typically draws a lot of attention, and a lot of times we see some movement in the markets because of it. But we had a WASD a week or so ago here. Not a lot of reaction to it.
Really boring. From a market standpoint, we've gotten in the habit in our office anyways of kind of watching that market right at 11 o'clock. And the last few reports, it's been just off like a rocket one way or the other. And I actually kept refreshing the screen because nothing was happening. And so yeah, a very boring WASD, which is what we normally see in this time of year. Now, a couple years ago, we had a shock and awe WASD in November, and that really kind of threw us off. And but I will say this number very in line. There's still a lot of discussion about export numbers getting backed off in future reports. It was a little bit early, most likely for USDA to pull any knee-jerk reaction there on an export number. But U.S. corn coming in at 1.2 billion bushel supply is pretty comfortable. Beans at 220 million for carryout, and I believe wheat was somewhere in that 4 to 500 million off the top of my head there. So pretty expected, nothing out of the norm. Unfortunately for us, when a report comes out, that's what we expect. We usually do see some premium taper off, and that was kind of what we saw Friday. A little bit of correction the following couple trading days, just because we were sitting from a chart standpoint, not even related to WASD, just strictly charts.
We're sitting here in the middle of December. Holidays are coming up. What do you see seasonally that you're keeping a close eye on that might have an impact, potentially seeing a rise in prices?
We're obviously, like I mentioned, South American weather is really important. We are getting a little bit of premium bump here and there on soybeans when you look at weather in Argentina. Now, I do not want to offend anyone when I say they're almost kind of like that stepchild of South America. I think sometimes we kind of feel that way out in Nebraska, versus the U.S. production. So we can relate to them being a headline, but at the end of the day, they're not the bulk of that primary production in South America. Brazil is where we really need to keep an eye on. And for all intents and purposes, their growing season looks phenomenal. So they are expecting to have a record bean crop. And I always caution my clients to getting too excited about what does a record bean crop mean. They're going to continue to put record crops in the ground, and if they have good weather, continue to raise that because they're always expanding. I think the better perspective is how much are they adding more than what we would expected from a trend line with them. And they're putting in another, I think the range is somewhere between 2 and 4 million metric tons of extra production versus what they should have been at. Now, this year's production looks massive compared to last year, but as you and I remember, last year was a massive drought. So, that's to be expected that we have a huge gain in Brazilian soybeans. So Argentina will continue to help with a little bit of premium here and there. The soybean oil market and the soy meal, that all of the kind of byproduct side of soybeans, definitely helping add premium here and there. Russia-Ukraine tensions seem to be high again, and so the wheat market is the other thing to really focus on. Corn is going to get drug in the middle, and we're seeing that all the time. Beans are up, they try. Wheat is down, they go down. So definitely watching wheat and watching soybeans will help give us some idea of where maybe direction should go after the first of the year. But I think right now people need to be prepared with what their goals, what their costs are going forward so that we can make those decisions through the first of the year.
Let's talk more about that in preparing. 2023 is right on the horizon here.
Yes.
What's your message to your clients about looking ahead to next year's crop?
I think to look forward, you definitely have to get a handle on where you are today with the 22 crop. So obviously continue to be in, clean up kind of settlement mode on 22. Maybe it's not physically moved, but at least know where you stand so that you can make good decisions about 23 going forward. The other thing that we've seen be hugely important over the last couple years especially is know your cost of production. When we talk about cost of production, it kind of used to just be, what's the seed cost? What's your cash rent? What is your chem and your fertilizer? It's not that easy anymore. We're definitely concerned about, the farmer should be concerned about interest rates and what that does to their operation, because those interest bills can be huge. We're talking about massive cost increases from this inflationary stand period we're in. So, does 7 to 8% interest on $1 million, or versus talking about a couple years ago, 3 to 5% interest on, 750,000. Those are big differences in numbers. And so everyone needs to be very concerned with accounting for that in their cost of production. So knowing that, and then being able to set a goal to say, okay, beans are in the money right now for 23. How much of that do I want to lock up from a profit margin standpoint as a starting point? And then where do we start with corn? Do we want to take a swing? Do we want to protect? What's the risk tolerance for this year? Because it's just that much more of a high dollar crop going into 23 than where we've been.
Something good to spend some time on to some of these colder days.
Yeah, stay inside, do your paperwork.
Yeah. I'm going to give you the final word this week as we round out 2022. What do you want to leave us with risk management suggestions wise?
One of the best pieces of advice I've ever gotten from a risk management standpoint is control the controllables. And I know that that's hard in the environment that we live in. We're worried about what's going to happen with Russia, what's China going to do, all of these big picture items. The reality is the things that we control are, execution of, logistics and delivery, execution of protection, whether it's floors or futures pricing, options, things like that. And so I always think, control the controllables and let everything else sort of just be what it's going to be. It's less overwhelming to make decisions on the things we can actually control.